Welcome everybody. It's very good to be back hosting this series. Packed house tonight, which is always a good thing. You're not here to listen to me, you're here to hear Tom speak, so I'll keep this very brief. In fact, I'll jump straight in. It's always very difficult, Tom, for me to play devil's advocate at events like this, and I'm expected to in some ways, but when I've got an inspiring entrepreneur sitting in front of me who wants to make the world a better place and make the world an easier place for consumers, that makes it even tougher. But I do want to start with a Reuters headline that came out at the end of last year. You probably know our journalist Kate Rumney, and the title of that, the headline of that, was Britain's digital banks popular but not profitable.
Guilty as charged. That's
fair, right? Yeah,
absolutely. Yeah.
And that's your biggest challenge.
Yeah, I think that's right. So we are 3 years old. It was our third birthday a couple of weeks ago. And I think we've achieved a huge amount along the way. But the biggest challenge or the biggest question that investors and the press always asked us was, you're never going to acquire customers. Impossible. New financial services can never. Big banks spend hundreds of pounds acquiring customers or accounts. You're never going to do it. And so we focused really hard on that. Almost too hard. And we grew to 500,000 customers without spending on marketing, which was a great thing because we solved that problem, but we created a whole other problem, which was that each customer lost us £65 a year.
Yep.
In times by 500,000 customers, that's a lot of expenditure. And so our focus this year absolutely is bringing that cost down and then adding revenue to get to profitability. We're a fast-growing app, not a business yet.
But you're going to bring the cost down at the expense of the customer, right?
That's not true, actually. So it's we've already brought the cost from 65 per customer to 25 per customer through the upgrade process from prepaid to current account. So how many of you have upgraded to current accounts? Great, almost everyone. Who's not? Please do it before the 4th of April, because there's a deadline and it'll stop working. So that transition from prepaid to the current account, hopefully the account works just as well, if not better. You get additional features, there's no degradation really, it just is much cheaper for us. And it was we put it as a sort of favour, help Monzo out please by upgrading. Simply that act brings the cost down by 70% to 25 quid a year. And we'll make a few refinements that hopefully the customers won't notice, and we'll add revenue through lending. It's
all right.
Pretty straightforward.
You know, I'm going to come back to your journey and the way this all happened and what it takes to do something like you did in just a second. But I want to stay with the business and the business model and the challenges you face for just a moment.
Sure.
The big banks, the incumbents, the traditional players are clearly muscling in on your turf, and they've got that trust on their side. Surveys, I believe, show that some of the luster of the app-only, the digital-only banks is being lost because the big players are showing that they can do it while at the same time maintaining that trust. Do you worry about that?
No, we don't really. I think there are a few things wrapped up in that question. I think one is trust in big banks, I think is overstated, actually. I think people who use smartphones to run their lives actually trust some of the big tech brands way more than the banks. I think the financial crisis and the ensuing just crisis and mismanagement of the banks after that has eroded trust hugely. So I think you can overstate the trust in big banks. I think secondly, the idea that big banks can catch up is sort of, there's a phrase in ice hockey which is you've got to skate where the puck is going. If you want to catch this thing, you've got to, if you skate at the puck, by the time you get there, it's gone so far ahead. I think that same analogy is true for our industry. The banks see things like freeze your card and go, oh, we can probably copy that. It'll take us a couple of years, but we'll get there. And, you know, Barclays now, you can freeze your card. Great.
So you're not worried at all about the big banks muscling in on this turf?
I'm much more afraid that we've not yet built something that's truly compelling for customers. I worry more about customers not caring than the big banks catching us.
What if they build something more compelling before you do? And they've got the muscle to do that. They've got the capital to do that. They've got the history to do that, right?
Yes, but they have historically been very poor at delivering customer-centric services. Banks are incredibly product-focused. And so you go to a bank and you meet the mortgage person or the credit card person. they think about financial products and how to sell more of them. There's no one in the bank whose job title is making customers really happy. In the way that somewhere like Instagram or Facebook or WhatsApp, they're just obsessed with what works for the customer. I don't think it's in their DNA. I think they're just focused on selling financial services.
Okay. Brings me perfectly then to my next point. The Amazons of the world, who are customer-centric, are also getting in on this game. Are you worried about them?
So the Amazons, they've all had a go and not succeeded yet. That's not to say they won't succeed, but so far their efforts have been pretty limited. So you've got Amazon Checkout, you've got Apple Pay, you've got Facebook Credits, you've got Google Wallet. They've all sort of had a go. And I think they will continue to encroach, sort of chipping bits off the edges, and it might be peer-to-peer payments is a big area, for example, or the whole checkout flow basically is one area. But I think there's a big black hole which is centered on your personal, your day-to-day current account, the hub of your finances, that central piece. And I think people are chipping away at the edges, but no one's really solving for the center.
So you, just to finish this up, you think that the digital bank, the app-only bank, the Monzo, is here to stay. You don't think 5 years down the road this marketplace is going to look quite different, and you might have done a tie-up with one of these big tech players?
I hope that's true. I wouldn't go so far as to say I'm sure yet. What I am very convinced of is that there's a new category of thing coming. This financial control center, this one hub to manage and visualize and control all of your finances in one place. That's not your bank, by the way. It's a thing that connects to your student loan and your gas and electricity and your mortgage and your car insurance and makes it all just work. I think that thing is coming. I don't know who's going to win that space. And
you're talking here about this marketplace of services,
sure.
this control center, I think you've called it before. I mean, that's your goal, right?
Absolutely.
How close are you to getting there?
1%.
Right.
Really a long way off.
So what needs to happen now to move this forward for you?
So our real focus this year is getting to break even, which is important because it provides us a really strong financial footing to invest in the future. If we continue to just run really hard at this marketplace, we won't go bankrupt, but we'll be reliant on external capital. So we'll have to keep going to investors, keep raising money. And at some point, there'll be a global financial crisis and we won't raise money and we'll go bankrupt. And that will kill us. And so we need to be self-sufficient to get that cash flow to invest in the future. And Google has done this amazingly well because their first product just turned into a cash cow and has fueled all this other stuff for the next 15 or 20 years.
When do you think you will turn a profit?
We're working really hard on it. I think we'll get pretty close this year. I'm not sure if we'll get there this year. I'd really hope so thereafter, probably next year.
Are the VCs, the Eileen Burbages of the world, putting pressure on you now to really make this happen?
The funding market is putting pressure, generally speaking, on startups to focus on unit economics. We have definitely seen that. So go back 5-6 years, Uber used plentiful, cheap capital as a weapon. Like, we can basically outraise our competitors and we'll just run loss-making services to wipe everyone out of the market and take a sort of dominant position. That worked really well. We'll see if it pays off for them. It's still not a home run. That led to a series of startups running, not just loss-making businesses are fine, but marginally loss-making business, i.e. each extra unit you sell loses you even more money. We're selling £10 for £9. Everyone wants to buy £10 for £9. And a lot of, especially the kind of delivery on demand startups, took this model, whether it's home cleaning or whether it's like iron your shirts or deliver food. Each unit created more loss than drove revenue. That is deeply unfashionable now as a result of just the enormous amount of capital that got burnt. And so for us, profitability is the goal, but a step towards that is getting to kind of contribution margin positive. So as I said before, we were losing £65 per extra customer. We're now only losing 25. We'll bring it down to say 20. We'll then make £20 of revenue so that each customer's break even. Then the next step is profitability as a business. It's the end goal is clearly what we're aiming at, but the trajectory is the more important thing.
What do you personally focus on? I ask this because I wonder if, dealing with that stuff, trying to find that profitability, dealing with the VCs, dealing with the pressure of the marketplace, does that take your eye off the ball of actually making this business work and what you really enjoy doing and the reason you set it up in the first place? And do you leave that stuff to other people or do you get your hands dirty with that as well?
I'm super My focus is unit economics. You ask any single member of our team what the priority for the company is, and they will say unit economics. I guarantee. The thing I really love is building products that consumers use. That feeling of, and you may have experienced it yourself, there's someone in the queue ahead of you at a sandwich shop, and they take their Monzo card out to pay, and the person behind the counter says, I've got one of those as well, and they have a conversation about how great it is. And I'm sitting there like anonymously behind them, just listening. That feeling is like nothing else. That's what I love, building products that people use and tell their friends about. But I'm a realist. I know that we have to build a profitable business to sustain that in the long term. We are not a charity. We need to have a viable business model to enable that to exist.
You talk about some of the other businesses. Let's just take a step back and look at some of the other things you did, because you got a degree in law, I think, right?
That's right.
And then you did Bozo.com, is that how I say it?
I'm really bad at choosing names. But yeah, Bozo.
Oh, Bozo, okay.
Buy or sell online.
I was being polite. Bozo.com at university. You did Go Cardless.
Yep.
Then you did this dating app, Grouper.
Yeah, I joined as an employie.
Okay.
So I joined as head of growth or VP of growth, and in 10 months I was there, we did not grow any single month, and I got sacked.
What happened, Jeff? Why were you so bad at that?
I'm still trying to figure it out. I think we reached market saturation, honestly. We got so popular so quickly, but failed to retain users. So we had basically every single person, i.e. like not coupled up person in New York City was a member of our dating app. It was unbelievably trendy in about 2014, but they only ever went on one date. It was a group dating app. They went on one and never again. And so once you sort of get the whole market, you implode, and we imploded.
But it was that business. I think I'm right in saying that it was something you could relate to. I think you've said it was your first experience of the consumer internet.
Yep.
That's why you made this jump into the sort of business you're working on now.
Yeah, and I think reductively you can see Monzo as a combination of Go Cardless is like how does the money move around. Grouper was how do human beings think and feel. You put those together, and reductively that's Monzo.
Back to this trust issue. I'm always interested. I spoke to a few people in our bureau today about this. This idea that they have a traditional bank account. They do bank online as well, but there's that trust backing them up. Do they have a point here? And how can you prove to them that you're in it for the long haul, that you've got your head around risk, fraud, regulation, financial crime, all these things that worry markets now?
Yeah. So the answer varies by customer segment. The early adopters will jump onto anything and take a ton of risk. The early mainstream will quickly follow them. The late mainstream and the laggards, we might even never get. And so it really varies. There are people who value a face-to-face relationship in a physical building in a checkbook. We're not going after those customers. We're going after people who live their lives on their smartphone and expect things to just work. And the banks have eroded trust there because you use a banking app and it does not just work. It's actually really frustrating. And you say there are these branches, but the branches are only open when I'm at work, 9 to 5, Monday to Friday. Like that's not convenient for me. I want to talk to my banker at 11 p.m. on a Friday when my card's got nicked and I need to freeze it or whatever. And so we win trust in a different way, which is not that we've been around for 350 years. We use the things where we have an unfair advantage. One of those is transparency. To be radically transparent about everything. That's a way of building trust. People worry that these decisions are being made in these back rooms that don't necessarily put their interests first, and the way you combat that is just show everyone all of the decisions you're making out in the open. I think there's also a point about trust is built in reaction to your screw-ups. Like, how do you deal with it when it goes wrong? And so if you've ever had your card cloned or money stolen with Monzo, we really, really take care to make sure you get your money back straight away and that everything works. I think it's those crisis moments that really build trust.
And you did have one of those, didn't you? I think it was July last year, you had the big problems with the payment processing partners.
For sure. And if you go down for 12 hours, and no one can use your card, you erode trust, like for sure.
And so how did you deal with that? I mean, how is it just a matter of a group of young guys showing humility to their clients?
So I think we came out of that with more goodwill and trust and positive press coverage than we had going into it, despite us going down for 12 hours. The way we reacted was immediate proactive communication. So we messaged all of our customers straight away to say, look, our card's having problems today. If you're going out, please take another card with you. And everyone's like, whoa, that's weird. Like, my bank wouldn't have ever said that. They'd have just hoped I didn't have a problem and waited to see. And then we worked really hard to get back online, and when it came back online, we immediately wrote a detailed post-mortem on what had gone wrong and how we were going to fix it. That helped. Now on the current account, we've moved to the plan, the conclusion of the post-mortem was, look, the technology partner we're using, we're not happy with, we're going to replace it. We've replaced it for the current account, and touch wood, we've not yet had problems. It's been really, really stable. We need to continue that for months and years to truly rebuild the trust. The people, we serve our customers, and the people who don't trust us still cite the outages from 6 or 9 months ago.
Yeah. What about the other players in this space? The Starlings, the Revoluts, the Atoms. It's difficult to talk about this space getting crowded, but at the same time, I'd quite like to hear your views on the much needed momentum that's required to make this stick around, this sector.
Yeah. Well, the first thing to say is that it's a huge market, right? Everyone needs at least one bank account, and most people have several. And so we are barely scratching the surface. I think our collective brand awareness is probably sub 10% now.
But you've got to do something better than they do, right? Or is that not the way you look at it?
I think we'd like to, and we strive to, but actually we don't have to. The group of challengers just have to be better than Barclays, Lloyds, and RBS, and the others. I think we can take massive market share off them if we do our jobs right. There's no point squabbling over the 500,000 kind of early adopters. Let's go and attack the.
What about banding together and getting a few of these outfits together and doing something as a stronger force against the incumbents?
Yeah, we talked about that in the early days, and I honestly don't know what happened to it. I mean, the founders of all of those companies you mentioned literally got together over a beer and said, look, we're going to kill ourselves if we fight. And we seem to have forgotten that.
Okay. Look, I just want to get some of the other news stuff out of the way, and then, sure. Before I come to these guys, talk a little bit about you. Expansion. You've moved into Ireland.
Yep.
Have you moved into Ireland?
We have completed our passporting to make our license technically work in Ireland. We're not planning to do, and that was published in the official register, and the press picked it up. We are not planning to launch consumer accounts like this week or next month even in Ireland. It allows us to work on it when we're ready. Our focus right now is getting the UK to profitability.
And what about the US? I mean, we hear about the US and what Monzo's doing over there, or at least that you're speaking to regulators, I think, at the moment. Is this just a case of you need to be seen to have some sort of interest in that massive market? Or are you really serious about breaking into that market soon?
We're really serious about it. We're in the US is early stages still. For us, the US is the big opportunity. And I can talk about why versus Europe, but for us, the US is the bet, not Europe. But the lead time is so long that we are buying optionality by investing in it now. So it won't pay off for 18 months or 2 years or even longer, but by investing a small amount now, we can get such long lead times that we need to do it now to buy that optionality so that once we get to profitability, we have this kind of cash generating business, we can deploy it into growth rather than then having to go through a 2-year process.
And how long before we see you in the US?
I can't give it, it's early days.
But what does that do to your bottom line breaking into that market? Just give us a sense of the excitement of making that work for you guys.
So I can give you like ballparks of valuation. And this is sort of how we talk to investors about it. If we build a 1 million-person bank in the UK and get to just about profitable, that's Metro, right? They're 1.5 million customers, just about profitable. Their market cap is about £3 billion right now. I think we will get close to that in the next year or 18 months. We're close to break even, close to 1 million customers, so not far off that. If you get to 10 million customers, I mean, that's a big bank in the UK, you're probably talking 10 times that amount. So from 3 billion to 30 billion, pretty significant. To go to 10 times that, 300 billion, I mean, you're now one of the most impactful companies in the entire world. You need the US market and probably a handful of others to get there. So those are the kind of orders of magnitude we think about, and that's why we're investing now a little bit for the optionality in future.
Okay. How many people work for the company?
300 odd.
And it's growing pretty fast, I imagine.
Yeah.
Or are you now saying, look, let's just
A year ago, we were 60 or 70,
Okay.
so we've grown massively.
Okay.
Yeah.
Back to this, the mindset, the entrepreneur's mindset, and I think that's what a lot of people here want to hear about as well. I mean, you are this, apologies if this sounds like a cliche, the serial entrepreneur, Bozo, Go Cardless, Grouper, and then Monzo. Did you always want to do this? Or, I mean, when you were studying law at Oxford, did you always want to set up your own business?
I think I'm just a really bad employee. Genuinely, I have never been promoted. I worked in management consulting. Like everyone who comes out of university and doesn't know what they want to do, they become a management consultant, which is not a terrible thing to do.
But when Grouper fired you, or if that's the case, when Grouper fired you, did you think, maybe I should have a rethink of this and go into management consultancy?
No, I should start my own company because I'm not going to fire myself. No, to answer your question, from a very young age, I wanted to run businesses. My father was a businessman. The word entrepreneur wasn't used then. He was a businessman. He started a construction company, employed a lot of people. And from the age of 4 or 5, I knew that was what I wanted to do. I'm just sort of admiring my father, I guess. But I didn't know that you could do computers as a job. That sounds weird today, but genuinely, growing up in the home counties, all of the successful people in my life were lawyers or accountants or engineers or bankers or whatever, and it's sort of professional services, and then perhaps you go and you start a law firm, that's your business. I loved computers, I loved building websites, but no one I knew did computers as a job. The internet was a fun toy. I started, even before Bozo, I started building websites for local estate agents in 1997 or maybe 1998. I was 13 or 14 years old, for like 100 or 200 quid a go. And I thought that was pocket money. I built a site called capitalrentals.co.uk. It was supposed to be an aggregation of all the different rental properties in London. But I was 16 and I was like, I built it. Why isn't anyone using it? And had no idea how to market it or promote it at all, and then just sort of let it die. It's really weird.
But apart from Grouper, have you ever failed in ventures? Because that's a big, for a lot of people, that's a big part of the learning process. It's a really essential part of the journey. I mean, I look at the way you've raised money in the past, and I see these numbers about you raising £1 million in 96 seconds or something like that, and you make the money raising almost sound easy. I mean, have you ever screwed up really badly?
Yeah, well, yes, but I think that there's a book called Lean Startup. I guess unwittingly take that approach. You make your failures really quick and really small, and you learn that's a failure really, really fast before it becomes a catastrophic screw up. You don't take a big 3-year bet that could screw. So I've launched a bunch of websites that haven't taken off, and they've sort of died a quiet death. So there was that Capital Rentals. I started a site called Card Hero, cardhe.ro, trendy name, which is like, look at it, it's really fun. Another one called mealmogul.co.uk, like a bunch of projects that I spent about a week on and was like, this is a dumb idea, shut it down. Yeah. But no, catastrophic screw-ups, I hope not yet. I guess I've been lucky in that regard.
What really worries you right now about the business? And we've talked about turning a profit, but what worries you? What could really upset the apple cart for you guys, do you think?
This is all about risk management. It's basically massive fraud, data breach, or infrastructure failure. So our IT systems go down, you can't use it for a week,
and then we come back to this trust issue.
Yeah, or hackers get in and steal all the money, or all of people's personal bank details get leaked on the internet, and again, trust. So those are company-ending events that we talk about quite a lot in our kind of risk and compliance and security teams. I think we've got a pretty good handle on it. Again, touch wood. The things I worry about really are the pace of execution. We will get to to break even, but if it takes us 18 months, we're going to have to go out and raise money on relatively speaking poor terms. If we can get there in 3 or 4 months, we're in amazing shape.
Just very quickly before I throw it out to our audience, talk to us a little bit about the culture at Monzo. Who are the sort of people you want to work with, and who are the sort of people you look at who come to your offices and you say, "There's absolutely no way I could work with them."
Interestingly enough,
write this down, everyone.
The FCA, the conduct regulator, are running a seminar on bank culture, which I'm going to in a week's time. I think it's a really hot topic, and it's something we care a lot about and we think a lot about. things we really value in employees is being really, really smart, just sort of fundamental, like first principles thinker, someone who really cares about human beings, like generally, and sort of Monzo's mission specifically, and the ability to like get shit done in a really short time frame and sort of make a decision with 60 or 70% of the information rather than having to wait for all of it.
You would hire a person who is more customer centric than brainy product centric.
We'd look for both.
But what's more important at this stage in your business?
It depends on the role. So in design or customer service, clearly customer centricity. If you're a back-end systems engineer, probably that you're just really, really, really smart. You understand distributed systems. The people who don't do well are those who come and say, we should solve this problem like this. And you ask why, and they say, but it's best practice. Or it's the way it's always been done, or all the other banks do it. Or the inability to reason from first principles. And you often have that problem if you have too much experience in an industry almost, you have all of these preconceptions, all of these ideas of how it should work, and you come into a place like Monzo and there's a 23-year-old saying, I think there's a better way. And you go, shut up, I've done it like this for 25 years. And that can be a really fractious relationship. Yeah. We have some great people who've come from banks, but they tend to be the mavericks at the banks, the ones who are always like pushing the rules a bit too far or making people run a little bit too fast.
And you like that?
We love that.
Okay. What do you do for free time? Do you have free time?
Yeah. I just got back off holiday. I was in Central America sailing. Okay. So I like skiing.
And you didn't think about the business, or you did? Every day, every second?
I made a point of leaving my laptop at home and turning off, uninstalling work email and Slack, and I cut myself off for a week. It was great.
Okay. Tom, thank you very much indeed for your candor and everything else. Tom Blomfield, thanks very much.